Hello once again, everybody. This is Rich with High Percent Trading. Thanks for watching this short video. We're going to show the trades, types of trade methods that you should be taking and the types of trade management that you should be doing roughly in the first couple of hours that these markets are trading. And by that, what we're talking about in crude oil, for example, is trading what we call the pit session open. Basically for the first hour using a momentum type approach, and then the second hour for more of a retrace type approach. For some of you who are familiar with that, we call the first one the accelerator and the second one the brakes. And then we're going to show a couple of the equity markets using the same analysis and the same types of entries, except that the time period is going to be a little bit shorter. On the equities, it's basically going to be the first half hour after the pit open, and then the next hour after that. So first half hour using the momentum-based accelerator type method, and the next hour the retrace type method. Now let's take a look at crude oil. And again, this is exactly the way that we're showing these trade setups. And just for everybody's information, we've been tracking this every pit session. This makes the 38th consecutive pit session in a row that has been profitable using this approach. So here's our 6 a.m. This is Pacific time, so that's going to be 9 a.m. Eastern. That's when we start trading. And using the 2-arrow rule, again, this is trading a momentum. We had a short entry here, went down and made a nice trade. We then had a long entry here. This long entry got stopped out, but the way it's taught is it came back down again. It's called a second bite out of the apple, and that's your trade here. That went up to make a nice scalp, not a big runner. So both of these we had a nice scalp, not a real big runner. The next one got stopped out, and then the re-entry, a nice scalp, no runner. Then we came over to still relatively early in the session, a short trade here that would have resulted in a scalp for you, but not a runner. And if your stop was up anywhere up in this area, you got stopped out. Now the interesting thing to note is the way this is taught, as it comes back up again and then reverses, this is what's called the second bite out of the apple. So that's the second trade entry here. This one did come down, and that one did produce a fairly nice runner from the standpoint of about 14 or 15 ticks. Now that brought us about half hour into the session, and notice we had a long trade entry here that went up for a very nice profit, and then a second arrow entry here. We only follow the 2-arrow rule in the same direction. Second entry here, a nice profit up, and then we don't take the next arrow because that's violation of the 2-arrow rule. That's arrow 1, that's arrow 2, nothing else. Then a short trade here, at least for a scalp, and no runner. Now that then brings us to 7 a.m. Pacific, which is 9 Eastern. We're going to go over to a different methodology now. This methodology is called the brakes. We're looking for more in the way of retrace trades now. Now it's important to note right here, would have normally qualified for our brakes retrace trade. However, we were off by 1 minute and therefore did not get this trade signaled in here. And that happens in trading. You need to be patient, you need to be disciplined, but then look what happens. Still within our time window, we're still looking to go the first hour or so in here before we came back down again. We still had about 20 minutes to go in the session. Nice trade entry here that moved up. Couldn't make new highs, but still a nice trade entry that, depending on where your entry was here, if you managed it up into the area here, that generated a good 24 ticks on a nice runner. So that basically took us through the first 2 hours. First hour using the momentum type accelerator method, second hour the brakes. And again, you can see just being patient, waiting for the trade setups, following your discipline, And that's what trading is all about. Patience, discipline, and timing. You did very well in this session. Now let's take a look at a couple of the equities. Okay, this is the Russell contract from this morning. We're starting looking at trading. Some of you start trading right at the pit open, which is 9:30 Eastern, 6:30 Pacific. Others of you wait 2 minutes just to give the market a little bit time to settle down. Again, following the same rules, we're using that momentum accelerator based method. You had a nice little long entry here that resulted in a scalp and no runner. If you had a tight stop, notice you came down under here. This was called the second bite out of the apple. It also triggered an entry here that came up, and then you had a nice runner all the way up into here. And notice this original trade never even got stopped out over here, but still a nice runner resulting in good profits. You're going to ignore this next arrow here because that's not the second one in the sequence. And then 7 a.m. comes, that's 10 a.m. Eastern. We're switching methods now. We're switching to the retrace method, the breaks. Look at this perfect entry down here. Just a beautiful entry. This is also called a phantom entry. This is the phantom zone. Some of you are familiar with that. Nice long trade entry here. Went up to make new highs on the session with a runner. That was about 80 ticks on a runner. And then notice we're still trading within the session. You had a second entry here. Depending on how you manage this, you may or may not have gotten a scalp out of it, right? And if you did get stopped out, your another entry was here. Now, we don't follow the 2-arrow rule when it comes to the retrace trades. They're separate. They have their own independent logic working in here. So again, that was another nice entry. And this went on to make new contract highs again on the session. So that's basically it. That took us out to 8 a.m. Pacific. That's 11 a.m. Eastern. That's an hour and a half after the pit session, and you can see all very nice trades here in the Russell. Let's take a look at the Nasdaq. All right, here's our final equity we're going to look at now. This is the Nasdaq right here. This is our pit open. First trade was a short trade coming down about 16 ticks here. Nice trade down. If you had a tight stop underneath it, or above it rather, it would have been right here. You would have got stopped out on a runner. If you tried to employ the second bite out of the apple, then you would have been thoroughly justified in taking the short entry right here again. But then look what happened. The momentum-based approach actually said it's time to, if you are short, flip it to long or go long. And that's what this trade did. A long entry here for a little bit of a scalp. If your stop was under here for your runner, it came back down. And this was the second bite out of the apple and or another trade signal. And this one went on again to make new highs on the session. Very nice move to the upside. Then we're going to basically ignore additional long entries here because of the 2-arrow rule. This brings us over to our 7 a.m. trade setups. We had one more short trade entry right here just before 7 a.m. Now this did not result in any type of a scalp. If you had a tight stop on it, you got taken out, but then look what the second bite out of the apple got you. As you got stopped out, we come up. Again, following the same rule, these markets are very efficient at trying to shake you out of trades. That was the re-entry, a very nice short trade. Almost, it did go coast to coast. And then as we switch to the other method of trading, that's the retrace method of trading. This is the trade that was signaled right here, signaled in real time. That would be getting out of any short that you have and then getting long to the upside. And again, this long trade went coast to coast. Very nice profit to the upside. This was a good one. You get a trade like this in your trade session, this makes your whole trading day. This is really what you want to try to catch on a big runner. Remember, runners only go 1 out of 4 times, but when they do, they're well worth it. Continuing on, we're still within our window. Of course, some of you, if you were trading this method, already made your goals for the days. So there's no reason to continue trading. But again, there's still a half hour left. You had a trade set up here that resulted in a scalp, and then a second trade set up here that also resulted in a scalp and a little bit more of a runner. And then you finally had this third entry out here. We did get a minor trend change, but the way the algorithms work in here, we're still okay based on the magnitude of this move. Another nice long trade, moved up a good 30 ticks here up into this area. And that brings us to our time. Here's our 8 a.m. out here. We're done. Hour and a half session. You can see using both methods, the accelerator method, the momentum method, the first half hour, and then the nicer retrace, the next hour. Very good market movement, very nice profits. And again, all three of the markets that we've been covering day in and day out here, profitable in the pit open session and just continued on through the retrace. Now, I hope that was helpful. Again, keep in mind, you need to apply the same set of rules and the same types of entries and the same logic day in and day out. Trading is all about patience, discipline, timing, and perseverance. The successful professional traders utilize that all the time. If you're struggling a little bit with your trades, again, keep this in mind as the approaches you should be taking, and always take that second bite out of the apple. That's extremely important in your trades. Well, thanks for watching, everybody. Have a nice day, and we'll get ready for holidays that are coming up here in a few more days. Thanks again. Bye now.